Got a couple of things just to cover off this afternoon, but anyway, through careful and responsible management of the economy, this government has done everything it can to protect New Zealanders from economic shocks felt worldwide. And this approach has worked. Unemployment dropped from 7.3% to 6.2% in the year to last September, and then dropped to a further 6% in the most recent figures. It now has the same level of unemployment as Australia. 24,000 more jobs were created in the December quarter alone, and 66,000 in total last year, the strongest annual rise since 2006. Every week, 1,500 people go off welfare into work, and there are now 17,000 fewer people on benefits than there were a year ago. Economic indicators are increasingly positive. Those were hard-won gains, and we want to build on them. It's against this backdrop that ministers considered the minimum wage at Cabinet today. You will have just received the announcement from Labour Minister Simon Bridges that the minimum wage will increase by 3.6% from $13.75 to $14.25 on April 1 this year. That means our minimum wage will stay at around 50% of the average wage, which is the highest ratio in the OECD. At the same time, the starting out and training minimum wages will rise from $11 to $11.40 to keep them at 80% of the adult minimum wage. This rise affects roughly 109,000 people who are on the minimum wage out of New Zealand's total workforce of around about 2 million people. They're predominantly young people and part-time employees without formal qualifications. Over 60% of those earning the minimum wage are between 16 and 24 years of age. The reality is that most young people move on to higher paying jobs as they gain skills and work experience. This government has invested heavily in programs for young people to help get them into work, stay in work, and get the experience they need to move on to their next job. We've raised the minimum wage every year that we've been in office. But we know there's a balance between raising the minimum wage and making sure we don't put businesses or jobs at risk or create a disincentive for firms to hire new employees. Today's announcement strikes the right balance. We're mindful of employment growth on the one hand, and on the other, we're ensuring those earning the lowest incomes find it a little easier to get by and get a bit more reward for their effort. Cabinet has today agreed to proceed also with the partial sale of Genesis Energy over the next month or so. It will be the last share offer in the government's program, which has so far raised around about $4 billion, which is money we're investing in new public assets without having to borrow more. Billings will set out more details of the Genesis offer, including a broad timetable, in a speech he is giving on Wednesday. What I can confirm today is that Genesis will be the last state-owned enterprise to be floated by the national-led government. Just as we did before the last election, we're making our position on share sales clear to New Zealanders before we go to the polls later this year. This government has been absolutely open and transparent in making commitments to New Zealanders and then sticking to them. The government won't be selling any more shares in SOEs or mixed ownership companies either this term or after the election. In other words, this will be the end of the share offer program. We've achieved what we wanted with the share offers in energy companies and Air New Zealand. We're now returning to a business as usual approach when it comes to SOEs. That obviously doesn't preclude SOEs buying and selling assets themselves, which they do all the time, or entering into joint ventures or other arrangements. Just in terms of activity this week, I'll be in Dunedin tomorrow and Auckland Wednesday. On Thursday, I'll be in Christchurch, and on Friday, I'm in Queenstown.
You've got an economy growing potentially at 4% over the next year or so. Is 50 cents a bit stingy?
No, I don't think so. I mean, if you look at the minimum wage increase today, we've raised it by 3.6%. That's against a backdrop of inflation of 1.6% and wage increases of roughly about 2.9%. So it's above that. We've raised the minimum wage every year we've been in office, so it's come from $12 to $14.25. We have one of the most generous minimum wages when you compare it to average hourly earnings. So in other words, our proportion is very high compared we're at about 50%. If you compare that with Australia, where the minimum wage is 44% of the average wage. In Canada it's 40%, the UK it's 39%, the US is 27%. So look, the bottom line message is we're trying to balance the capacity for businesses to pay a bit more and for people to earn enough to live, but on the other side of the coin against the impact it would have on jobs.
Some people we've spoken to have said that 50 cents wouldn't make a dent at all. What's your message to them?
Well, I think every bit helps. We've gone from $12 to $14.25. I think it's also important to understand that we are talking about a group which may also receive entitlements from the government through Working for Families accommodation supplements and the likes, but also most people earn above the minimum wage, so there are flow-on effects. So there's 109,000 people approximately we think are affected by this decision today, but that's out of a workforce of around about 2 million people.
So you think that people should be pleased with this, the fact that you're going up by 50 cents, not just 25?
No, look, I accept that people will always want more, and I accept it's very difficult for people, getting by on low wages. But the reality is for them to move rapidly up the sort of wage curve, we need those people to be getting more skills and to more challenging work, if you like. And so that's where the government's focus attention is also is at raising that skill level.
What was the advice about how many jobs that increase in the minimum wage might cost?
Yeah, so it's relatively negligible at these levels. If we went to $14.50, for instance, the impact was it would likely affect 2,300 jobs, and you can go all the way up to we've showed the modelling, but all the way up to $18.80 or whatever people are arguing around the living wage. So obviously, as you take the minimum wage higher and higher, it has more flow-on impacts on other earners, and secondly, ultimately cuts into the desirability for employers to hire new employees.
Is there room to shift the minimum wage up twice in 1 year? Is that a kind of realistic prospect?
We have an annual adjustment process, so we tend to review it once a year. Of course, technically, I suppose anything's possible, but the law, I think, demands that we look at it on a yearly basis.
Why have you decided to stop the SOE sales process?
Well, I think for all that's been said about the SOE program, it's actually been successful. And for a start off, the government has raised well over $4 billion by the time we get through the Genesis float that we now can use to buy other assets without borrowing. Secondly, I think, and just as importantly, we've provided greater depth to the capital markets and much greater transparency and oversight of these important public assets. So in essence, we always thought the Air New Zealand model was a good model, and we've now extended that obviously to Mighty River Power, to Meridian, and soon to be Genesis. But the truth is that there aren't a lot of other assets that would fit in the category where they would be either appealing to take to the market or of a size that would warrant a further program. Or they sit in a category where they are very large, like Transpower, but are a monopoly asset and so aren't suited, I think. So what we're trying to do is make sure people are clear. We had a program, we were very clear about that at the 2011 election, we've honoured that, but equally we want to make sure that people are clear and aren't misinformed by our political opponents that somehow there is going to be further asset sales or mixed ownership companies. That won't be the case.
What about Kiwibank? You could have floated that.
No.
Why not?
Kiwibank has its own set of issues. I mean, look, it hasn't actually paid a dividend to the government in the 8 or 10 years it's been in operation. It's had about $850 million, I think, put into it as it builds up its capital base. But look, I just don't think that that's would warrant a whole new program for one particular thing. I mean, the government might better put more resources into Kiwibank to allow it to grow. That's always a topic of conversation, but I just don't think we need to take that to the market.
With Genesis, are you going to sell 49% on the stock market?
Well, I'll leave Bill English to take you through all the details. It's better than we do that on Wednesday.
Why not wait with Genesis?
Yeah, I mean, look, you could, but I mean, again, Bill will take you through all of it, but our perception is that that wouldn't really make a huge difference to price.
With the wage issue, so what, 3.6%?
Yeah.
Are you confident that people who aren't on the minimum wage will get a similar pay rise?
Well, if you look at the number of people who are currently on the minimum wage, which is $13.75 an hour, I think that's about 54,000 people. So the fact that going to $14.25 affects 109,000 people tells you there's another 55,000 people that are in that category of earning between 30 and 75 and 14 and 25. And that's what happens when you raise the minimum wage. Typically, that flows through to wage increases across the board, because you could just raise minimum wage and no other wages, but typically it flows through. So I think what it's showing you is that we believe wage rounds are affordable, but again, they have to be measured and important that they're at risk jobs.
Would you encourage employers to be giving reasonable pay increases to all workers, because you've got interest rates possibly rising, cost of living increasing?
Well, the good news part of the story is inflation is actually low. I mean, if you look at it, we have had real net after-tax wage growth in the time that we've been the government, and that's taken place because inflation's been low, interest rates have been falling, and essentially wage growth, even though it's been modest, has been in excess of that. And on top of that, we've also had personal tax cuts that have come in. I mean, look, I think it's always important for employers to take on board the need of their employees and to sort of share the spoils, if you like. If the economy's doing better and they can afford to pay a bit more, then we would actively encourage them to do that. We want New Zealanders moving up the pay scale, but it's really important, obviously, that we help them, help employers, allow them to do that, to increase the wages of employees by building greater efficiency in the economy and greater productivity.
Is that 3.6% increase in wages, and if it is carried on up the scale, does that create an inflation risk, which means that interest rates will have to rise in response?
So that's again always the balancing argument that we have to look at. So we don't want to put enormous pressure on the Reserve Bank, and I don't believe raising the minimum wage to $14.25 now will put enormous pressure on the Reserve Bank. I think it will fit in with where broadly most economists, and I suspect the Reserve Bank, expect wages to be going.
Just on the CTV and the police investigation, have the police been too slow?
Criminal investigations are difficult. The bar is much higher than some, for instance, the Royal Commission. If they were to progress with a criminal charge, they have to be, I think, very sure that they can be successful, because that will have quite an impact on those involved. So no, I don't have any evidence to support that they have been slow. They obviously run their own investigations and have full operational independence, but I suspect they're being careful to make sure that if they do press charges, that they've got the facts right.
Are you disappointed that the architects who put together the CTV building are still operating?
Look, I think because it's possible that there is criminal charges are laid, it's better if I just leave it to run its course.
Just on superannuation, Australia says it's reviewing the age of eligibility. Will that ever happen, a review under your government?
Well, we're not planning a review, and the reason is we're actually comfortable with the cost of superannuation in New Zealand. It's currently running at about 4.5% of GDP. There are many countries around the world where their public system of superannuation is costing well in excess of 7% of GDP. Ours is likely, at the height of all the baby boomers getting super, to cost somewhere between 7 and 8% of GDP. So we've modelled it, it's affordable, and actually I don't think raising the age does nearly as much as people think to reducing costs. So if you raise the age from 65 to 67, you reduce the cost of New Zealand superannuation by under 1% of GDP, and that doesn't even start before 2030. So look, we've made our choices about where we want to both essentially spend money and, from a government point of view, raise taxes and raise money. Labor is arguing they want to raise the age of super, but not because they're trying to be fiscally responsible. They're actually arguing they want to spend more money in a different place. So they're not going to have any impact on the books from raising the age of super. They're just going to make people work longer so they can try and brighten with their own money.
What about Peter Dunn's Flexi Super idea? Is that possible?
They're still kicking that around. He's had the submissions, as I understand it, and that process is now closed. Not surprisingly, most people have liked the idea of being able to retire a little earlier. They just don't like the idea of having a reduced rate when they retire earlier.
But you're open to that idea?
I think Flexi Super's got some merit to it, because there are people that will want to retire both earlier at a lower payment and later at a higher payment. But that has no fiscal impact on the Crown's books, because the actuaries would work that out in a way where the cost would be the same to the government. We wouldn't make a losing on the deal.
When are you looking to make a final decision on that before the election?
Yes, I guess so. I mean, ultimately we'd need to campaign, or Mr. Dunn may well want to campaign on that. We'll need to think about that a little bit more. We'd need to certainly work our way through all of those submissions and get a sense of the pros and cons of it. There are challenges, both in terms of the software and the support to back that up, and whether it's actually.
There are a lot of smaller companies that the government owns, the likes of Learning Media, which is gone now. What are you going to do with them? Because some of them are declining businesses, no longer profitable, arguably not profitable.
And that's actually the challenge with the SOEs. For all of the arguments that these were the crown jewels, if you like, it's actually fundamentally not true. Some of them have been big and important assets for the government, but actually the bulk of the government's financial assets actually rests in ACC and the New Zealand Super Fund. They are far larger than the SOE portfolio that we have. Some of them, and as I said in my remarks, there will be a return to business as usual. So that will mean some of them will buy or sell assets in their own right. Landcorp's constantly doing that. There are some smaller ones which, goodness knows what will happen, but ultimately what the government's saying is we'll just continue to manage them, run them, do the best we can. They're too small anyway to really realistically be part of a model.
Do you see more of them going the way of Learning Media, winding up where you can't do anything with them?
Well, Learning Media was the one that was most prone to that. There are one or two that are on less firm a footing than others, but not as serious shape. The only one that's really big, or at least was big, and a challenge is Solid Energy, and it's yet to be proven whether how that will play out with Solid
Do you
Energy.
have any updates, because the coal price is continuing to fall, isn't it? Do you have any updates on how that's progressing?
I think it's very challenging, but we'll try and do our best to keep the company
Do you
afloat.
think it can survive?
Yeah, I think it can survive, but its asset value is very low. And it's probably gone from being worth arguably 2 or 3 billion to nothing to 300 million maybe.
Just
What
on
were the key
Super-
issues that the cabinet had to consider to get the decision to go ahead with the Genesis over the line, the final balance?
So we take advice from the joint lead managers, the JLMs, and their capacity to move the stock. Secondly, the price and what would be the implications of taking it to market. Is there retail and institutional demand? Like any company, is it we're absolutely confident it's fit for this process. So there's all of those different issues. I think what is true is that while we've brought a reasonable number of energy assets to the market in the last 6 months or so, I don't think the price actually that we could achieve for Genesis will change dramatically whether we take it to market in the next month or two, or whether we take it to market in 14 months. I think that position's understood by investors, and it has a certain price and will be what it will be, but I don't think it will dramatically change it in the next year or so.
And there's going to be a more generous incentive to buy and to hold the shares?
Well, again, we've always used a different form of kind of incentive for the programs that we run, with the exception of New Zealand. So you can speculate about whether there might be some sweetener in the deal when Billingish talks about that later on.
Can you tell us roughly how much you might expect to get from that sale?
I'll just leave it to say I know the numbers, but it doesn't mean so.
Just on superannuation, do you think there's any merit in income testing?
No, not really. I mean, look, I'm aware of the fact that there are people who earn high levels of paid income also get New Zealand Super. But what's also true is 20% of all people aged over 65 continue to work. So some countries means test that, but that actually just discourages older New Zealanders to actually be in employment. So in Australia, for instance, where it is means tested, instead of having 20% of people working aged over 65, in Australia it's only 11%. Firstly, does it make sense for the economy to take those people out of the workforce? I think not. Secondly, not everyone takes New Zealand Super. So there's a group of New Zealanders that get to the age of 65, they're eligible, but they don't sign up for it.
Would you?
Hadn't given much thought to it because it's quite a way away. Probably not. I think one does, but we'll see.
You
So
highlighted
any thoughts to
this
the-
morning that you were getting closer to announcing an election date. Are we there yet?
We're not there yet, but we're moving along. I'm turning my mind to it.
What about the flag issue? Was that discussed with Hamilton?
Not today.
on the asset sales, so you're saying that over the last 30 years since we started selling assets, we've basically reached the end of the line. There's no more of the family silver to sell.
Well, if you think about what's left, you've got New Zealand Post, which frankly would be a very difficult business to sell with the exception of Kiwi Bank, which isn't actually producing any cash. So there'd be no cash flow coming off it, you'd be buying on expectation. But New Zealand Post is in a declining business. You'd have Television New Zealand, which, of course would be possible, but again, is in a highly competitive market, probably difficult to get that away. Then you've got big ones, Transpower, but it's a monopoly, and I don't think it actually makes sense to sell shares in Transpower. The rest of them are largely kind of rats and mice, not big ones. So we could sell them in totality, like a Cordia or whatever, but that would be a very different deal to the mixed ownership, and frankly probably wouldn't be worth the political argument.
Do you see any economic gains in basically selling the rest of the power companies at some point in the future?
That's not going to happen. I mean, when we set up the program, it was very deliberate. It was to keep majority control, but bring in all the benefits of the external private shareholders. I think that's going to work well for those companies over time. But the view of New Zealanders is they probably want to keep 51% control.
So it's a political decision rather than economic one. Governments can regulate, they can exercise control over the industry by regulating it.
Well, it's always been political, and I think what we've seen in the course of this debate is a lot of political rhetoric which actually doesn't really bear scrutiny. I mean, as I've said to you guys so many times before, but it's true, not one single political party ever campaigned to buy back the bit of Air New Zealand that we didn't own. It operated highly effectively as part of the mixed ownership model, and I think these other companies like Meridian, Mitre River Power and Genesis will do the same. I don't think it has any of the impacts that Labour and the Greens would argue, but I think it's one of those issues where there's always going to be a political touchstone for some people.
At the G20 on the weekend, Bill English signed up to the base erosion and profit shifting agreement, G20. Do you think it's fair that someone like Google could earn, say, $200 million in New Zealand and pay $165,000 in tax?
Well, my view is that these big multinationals should pay their fair share of tax, and while they may be paying what is legally correct, the question is that sort of ethically the right amount of tax we're going to be paying. So the only way you're ever going to be able to resolve that issue is when all of the jurisdictions hold hands and agree to share information in the way that G20 you were talking about the weekend. So I actually applaud the steps they're taking, because I don't think any one individual country can resolve that issue on their own, but I think collectively we might be able to.
What is the ethical level of tax for a company like that?
Well, I don't know the answer there. I haven't drilled down into their books and all that sort of stuff, but I've seen some of the reported numbers in the media of what some of these multinationals are paying, and if that's right, it seems to me to be incredibly low. Now, in the end, it may be legally correct in terms of where income is actually earned, but it doesn't seem logical. And this isn't an issue that's just about New Zealand. I mean, these big companies like Google and Facebook and Starbucks and Amazon, they are under pressure in lots of jurisdictions around the world. So the question is, if they're not paying tax in any of those jurisdictions, where are they paying tax? And are they paying the right level for places that are in operation? I don't know the answers to those, but I know the argument that somehow we're going to ban Facebook like the Labour Party want to do is not going to work. So actually the only way to make it work and make sure that these companies are paying their tax is that we all collectively are of the view that we're going to hold them to account.
What do you think, though, of taking more direct action if you can't get international agreement? Let's say some sort of tax on turnover.
I guess in the end, the G20 is going to go away because this is one of their big topics for this year, and really look and see whether they can sort of crack the nut, if you like. If they can't, then maybe they do need to look at other things. But I wouldn't want to jump to that point without sort of trying to exhaust all the other options.
Just on something quite different, the Auckland Island sea lions, I think, got the government announcing some measures to save the species.
Yeah, Nick Smith's going to make an announcement, I think, tomorrow on that. He has all those details, I don't.
Just on Mr. Peters' claims about Hooker Lodge last week.
Yeah.
Do you know Alex Van Heeren, and have you ever had any conversations with either him or any of his associates about the future ownership of the lodge?
Yes, I know Alex Van Heeren. I can honestly tell you I've never in my life had a discussion with him about the sale of Hoka Lodge. I last saw him when he was in New Zealand, pretty sure last year. Dropped in and had a glass of wine with him at Hoka Lodge, funny enough, on my way to one of the regional conferences. Pretty sure that's the last time I saw him. I'd be amazed if he's looking to sell. I mean, I can't speak for Alex Van Heeren, but he's been a very long-term owner and looks to love that property, but you have to go and ask him. But look, from what I can see, Mr. Peters is making it up.
Should politicians be more careful, particularly in an election year, about their claims that they've thrown out?
Well, I think what's going to happen is the public is going to judge politicians on the comments they make, the claims they make, and the validity of them. I mean, in the end, Winston Peters looks like a fool for the comments he made on Friday. They're just plain wrong. So, in the end, if you get traction on a political issue, you actually have to be right. And there has to be validity to it. And that's one of the arguments I've really been making about Shane Jones's claims about Countdown. I'm not saying they're wrong. Actually, the government's been very supportive of an inquiry.